Hey, hello investors and future investors. Welcome to the channel. For today's video, if you're in the market to pick up some LEAPS option, in today's video, I'm going to show you three of the very best LEAPS to pick up right now. The reason for that is that these three LEAPS option have way more upside than they do downside. So if you're trying to do options in order for you to make that extra income to supplement your regular 9 to 5, or you're new to options trading, then this is definitely the right video for you. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, we're going to be going over three LEAPS option that if you want to pick up a LEAPS option, you could definitely use these three right now in order for you to profit in the long term. Now, before we get into this LEAPS option, I would only require two things from you. Number one is going to be always make sure you do your own due diligence before investing. What might work for my portfolio may not work for you. And number two, always make sure to have an exit strategy before entering any options trade. That being said, let's go ahead and get down and dirty with options. So the first one is going to be Trade Desk, TTD. Now, these three leaps are going to be diversified by sectors because if you're going to pick up three leaps only, you need to protect your portfolio with a little bit of diversity. So, Trade Desk is in the advertising space. Now, before I go ahead and show you what leaps option I'm going to pick up with Trade Desk, I'm just going to show you a bit technical analysis on this thing. So, let's go ahead into the Robinhood Advanced feature right here, and that's going to open up the chart. Now, we're going to go to the 1 year mark right here and look at this. Now, in my opinion, I think Trade Desk is a very good stock. Now, if you're getting a very good stock at such a discount, I mean, what else can you ask for? Now, Trade Desk has been having difficulty going past the $40 mark. So, that being said, let's go ahead and get into the options chain for Trade Desk. Okay, so here we are on Trade Desk. And for you guys that are new to option, a LEAPS option is a long-term option contract. LEAPS stands for Long-Term Equity Anticipation Securities. The whole point of getting into a LEAPS option is that you're bullish on the stock. You're of the mindset that the stock is going to be appreciated in value over time. Now, in order to get this one started, if I were to pick up Trade Desk LEAPS option right now today, this is what I'll pick up. So we're going to first go to buy. We're going to go to call. Then we're going to choose our expiration date. Remember, in order for it to be a LEAPS option, it's going to have to be 365 days or more. So we're going to try to get the closest to that, which is going to give us March 20th, 2026, which gives us 332 days to expiration. Now, in order to maximize the efficiency of this option strategy, it is highly advisable to choose your strike price below the share price. Now, like I said, if I were to pick up Trade Desk right now and I was trading with a small options portfolio, I would go with either the $50 strike price or the $45 strike price. Now, I would not go with the $47 strike price based on just a personal preference. I just don't like the 0.5s or the halvesies. So, if you were to pick up the $50 strike price, you'd have to pay $12.25, which is going to equal to $1,225. Now, by picking up a LEAPS option, that allows you to control 100 shares of the stock. Instead of buying the stock for $49.50 or $4,950, you could control 100 shares for only $1,225, which is a fraction of the cost. That is why LEAPS option is such a popular, powerful option strategy. Now, the other one you could pick up is, like I mentioned, is going to be the $45 strike price, and then you're going to have to pay $1,455 for that. Trade within your portfolio. Don't buy anything too big for your portfolio, and always make sure to diversify. Now, one thing in common with all of my LEAPS option, I like to choose LEAPS option that has implied volatility of between 50% and 100%. Let's open up both of these and see if they hit the criteria. Okay, so the first $50 strike price has a implied volatility of 64%. Now, this is how implied volatility works. Any implied volatility of 1% to 50% is very low risk stock. Now, as opposed to the low risk stock, the high risk stock is going to have an implied volatility of 100% and above. With the high risk stocks, that tells you that the stock is a bit risky and the share price jumps up and down very quickly. Now, you could still trade high risk volatility stocks. You just need to be extra careful. Now, the sweet spot is always going to be between 50% and 100%. And that is my sweet spot when I'm picking up a LEAPS option. Let's go ahead and check out the $45 strike price if that meets the criteria as well. Let me just go ahead and scroll down. And yes, an implied volatility of 67%. So both of these strike prices are good if you would pick up a LEAPS option on Trade Desk right now. Remember, Trade Desk is in the advertising space, and I think right now, personally, Trade Desk is being sold at a ridiculous discount. So that's my number one LEAPS option I would pick up if I would buy a LEAPS option right now. Full disclosure, I do have all three of these LEAPS options already in my portfolio. Let's go ahead and get to the second LEAPS option I would pick up if I were to get LEAPS option today. And that would be ARM, ticker ARM. So here we are on ARM Holdings PLC. Now, ARM is in the semiconductor space. So first we had advertising, now we had semiconducting. Now, ARM is a bit pricey if you're trading with a small account, but the LEAPS option is allow you to trade this option no matter how high the price is. So let's go ahead and get into the options chain. Okay, so here we are in the options chain, and if I were to pick up a LEAPS option on ARM right now, this is what I'll do. I'm going to go to buy, I'm going to go to call, and once again, I'm going to select the strike date of March 20th, being that that one gives us the closest strike date to 365 days. Let's go ahead, we're going to select that. And then now I'm going to go ahead and choose the strike price. Now the strike price I would choose for ARM is going to be either the 105 strike price or the $100 strike price. Both of these strike prices are good. Now, choose whichever one you think suits your fancy based on affordability. One, if you were to choose the 105, you would have to pay $2,225. If you were to choose the $100 strike price, you would have to pay $2,455. Now, the better strike price between the two is going to be the $100 strike price. The reason for that is that ARM has been having difficulty breaking the $100 support line. So, in my opinion, the $100 strike price is going to be a bit better than the 105, but both of them are good. Now, when buying LEAPS option and you buy a LEAPS option that is the closest price to the share price, either above the share price or below the share price, that is known as buying at the money. So the closest strike price at the money below the share price is going to be the $100 strike price, and the closest strike price above the share price that is at the money is going to be $105 strike price. Now, we're going to go ahead and get into the third LEAPS option that if I were to pick up a LEAPS option, I would get it today. And I did say this before, I'm going to mention this one more time. I do have this LEAPS option in my portfolio once again. Now, the third LEAPS option is pretty much common sense, and that is going to be Robinhood, ticker HOOD. Okay, so here we are on Robinhood. Well, this is a pretty attractive curve right here, but let's go ahead and get into the Robinhood options chain. Okay, so here we are on the Robinhood options chain. And if I were to pick up Robinhood right now, this is what I'll do. Now, before we get into that, remember the first stock was in the advertising space, Trade Desk. The second stock was in the semiconductor space, which is ARM Holdings PLC. This third stock, Robinhood, is in the finance space. So if you were to pick up all three, then you'd be diversified across sectors. Now, I would go to buy, I would go to call, and I'm going to maintain the exact same strike date of March 20th, which gives us 332 days to expiration. Now I'm going to go ahead, I'm going to select my strike price. Now the strike price I would choose is going to be the $40 strike price. Once again, with Robinhood, this stock has lots of difficulty breaking the $40 support level. So I would choose the $40 strike price. Now, if you were to buy the $40 strike price, you would have to pay $12.85 or $1,285. Now, that is an extremely good deal, being that if you were to buy 100 shares of Robinhood right now, you'd pay $4,464. By trying to control 100 shares by using the LEAPS option strategy, now you're only going to pay $1,285. So there you have it. If I were to pick up 3 LEAPS option right now, my choices would be the Trade Desk, Arm Holdings PLC, and Robinhood. All three of these stocks have way more upside than they do downside. Even if we're in a time of lots of volatility right now, I still think these leaps options give anyone that's going to purchase them a real shot, a real opportunity at making lots of gains in the long term. Now, before you guys forget, I want to remind you guys LEAPS option stands for long term equity anticipation securities, with the emphasis being on long term. By purchasing LEAPS option, you need to keep these things in your portfolio as you wait for the share price to increase in value. And that is how you increase your investment gains. Now, if you guys have any questions about any one of these stocks or the LEAPS option strategy, or if you want to use the leaps option strategy in your portfolio in order to make consistent income, then let me know in the comments below. Also, on this channel, we specialize on helping small accounts portfolio grow consistently over time. If you're interested in one-on-one coaching, then the link for that is going to be in the description below. Now, go ahead, like the video, subscribe to the channel. Make sure to hit the notification bell to get an alert whenever I post a video. But most importantly, we are here to help each other out. If there's anyone out there that is struggling to grow a small accounts portfolio, then feel free to share this video with them. I mean, it's only the right thing to do. And until the next video, keep pushing your investments.